Okay, hello everyone, and welcome to a little tour of how to use this wheeling, billing, and revenue recon tool. And I'm just going to take you through how it works from start to finish and show you a few examples of how you can use it. First page here is the guide, and as you can see, it's got a model map, table of the different sheets, and then a little color key for you. Essentially, what it's saying is that we will collect a whole bunch of data inputs that you as the user will provide. So it'll be Eskom tariff data, municipal tariff data, Eskom and end user consumption data. And then if you have a municipal connected generator, then the generator data as well. The calculations vary according to what we're trying to calculate, but essentially it's taking the tariff data and the consumption data and multiplying them together, and also looking at the net revenue pre and post wheeling. And with those two calculations combined, we then come to the final results where there will be an example of a final Eskom bill that you can expect and to see how wheeling impacts that. A final municipal bill, which we've also coupled with an invoice that you can use and give straight to your wheeling customers, and then a final generator bill if necessary, and then also the revenue impact of wheeling. So firstly, we go to the data inputs, and if you look at the guide here, you'll see that anything in yellow is what you edit. Anything else you don't edit. So when it comes to the Eskom data inputs, you will input all of the things you would see on your Eskom bill normally. So your municipality name, the intake point in question, the month of the year. It's important to select this from the drop-down list because this will determine if it's a high or low season. Over here, you won't edit this anymore because it used to have Mega Flex, Mini Flex, everything. Now it's just Munich Flex, so no need to change anything there. You'll then edit your supply voltage based on the specific intake point, your transmission zone, how close you are to the central area in South Africa. That's also in the Eskom tariff book if you need to look at it. Your customer category, and then whether the wheeling generator is Eskom connected or municipal connected. I'll leave it as Eskom connected for now. Then you get down to the municipal Eskom consumption data inputs. So this is all of the energy purchased from Eskom at the specific intake point or POD. So you must put in the total number of kilowatt hours purchased, the amounts of kilowatt hours that were wheeled, and then other important things like notified maximum demand, your maximum demand, and your reactive energy. You then also will put in your municipal retail tariffs. So this is what you charge your customer. So you can put the name of the tariff there. Then you also put what the charges are for the off-peak, standard, and peak times, both for winter and summer. Ideally, as we've spoken about in some of the sessions during this training, it's important for especially bigger industrial customers to have time of use and seasonal tariffs because those are more cost reflective. You can then also include a basic charge, a capacity charge, a demand charge, and then if you have other charges, you can edit those there, put in the unit and the amount. Then there's also the wheeling tariff input. So if you have a customer that's going to be wheeling in your municipality, you can firstly put the name in, and then you can choose if you're going to just use a WEPS credit method to recover your use of system costs, or if you're going to charge an explicit use of system tariff. If you choose WEPS, you can see it blanks out everything here. You don't put in the energy side of it at all, and you just put in a fixed wheeling charge for the month. If you use of system tariffs, you select it here. It allows you then to edit these cells here, and you can put in whichever tariff you've designed. I've left these test tariffs here so you can experiment with how they affect revenue, which I'll show you a bit later on. I'm going to change it back to WEPs for now. And then the end user consumption. So this is the customer that is wheeling electricity. So what you'll include here is the customer name, then their total consumption. So the total of what they buy from the municipality, how much of that is wheeled energy, and then any other relevant charges like notified maximum demand and capacity. For the purposes of this video, I'm not really going to go into municipal connected generator tariffs. That we'll cover in a separate video. So once you've put in all of your data, we then move to the Eskom bill. So essentially what this is just a summary of what you would expect to get from Eskom at the end of the month. And it explains how wheeling impacts your Eskom bill. So the first section here is just a summary of your inputs. Then this main table here shows you for each different charge what the tariff is. These all change according to what you've inputted. Shows you the unit, shows you the consumption, and then the cost. And you can go all the way down and you'll see what your final Eskom bill will be. This should look exactly the same as your Eskom bill. Then if you scroll down a bit more, you'll see the summary of the bill before and after reconciliation. And you can see that as a result of wheeling, the energy purchases from Eskom have reduced, which means that there's a 2 million rand saving or a reduction in your Eskom bill. You can see that there was an added cost, a wheeling admin charge, but that shouldn't be too concerning because that's something that you can then charge customers, so you can recover that fixed charge there. Next, we go to the customer bill. So follows a similar structure to the Eskom bill. Firstly, there's a summary of the inputs, and then it follows the same structure of the tariff, the unit, the consumption, the unit, and the amount payable. Then if you scroll down, you'll see the bill summary before and after wheeling. You can see again that because of wheeling, your income from selling electricity to the customer reduces. So now your total revenue used to be 7 million. It's now 4.7 million. So now you might be wondering, what is the revenue impact of wheeling in my municipality? So what you'll then do is you'll go over to the revenue impact tab over here. Here you'll see again the main inputs. This focuses on energy specifically, and it doesn't look at the other charges like fixed charges and things because in theory that shouldn't change much. It then summarizes your energy consumption, the tariffs, whether you're using WEPs or use of system will be reflected here. And then it compares the Eskom bill before wheeling and after wheeling and shows you the change from before wheeling to after. And then same, what the customer bill used to be before wheeling and what it is now after wheeling and the reduction. And then it shows you how the net revenue is affected. So in this case, the net revenue pre-wheeling was 2.6 million rand, and afterwards the net revenue is 2.6 million rand, which means that there's been no change in the municipality's net revenue. And that's reflected here in this graph. You can see that the total income from selling electricity to the customer has reduced from this point here down to this point here. But also the Eskom expenses, the purchases from Eskom have reduced as well, meaning that this orange section here, the net revenue, remains unchanged. So that's the first example. So now I'll show you how a few things can affect that. Let's say now if you choose to use a use of system tariff instead of a WEPS credit method, you'll see here this on the customer bill. This has changed to be a use of system tariff, and it's pulled those through there. Previously, because we were doing credits, these were negative amounts. They're no longer negative, they're positive, and that's because it's a different way of calculating the use of system. And then if we come to the revenue impact over here, you can see now it's said that we're going to use a use of system tariff instead of WEPS. And you can see now, if we go down, that the net revenue after wheeling is much lower than it was before wheeling. So it's been a change in net revenue of 1.9 million. And you can see that's reflected here on the graph. So essentially, the municipality is not making as much revenue now based on its use of system charges. So you as the municipality would need to come and experiment with these and design tariffs based on a cost of supply study that are cost reflective, which allow you to remain revenue neutral. Let's also say you go back to using a WEPS credit, but you now have a municipal connected generator. You'll see now the bill may also change. And if you go to the revenue impact, you'll see that because you're no longer buying those kilowatt hours from Eskom and they're being supplied from a generator within your municipality, your Eskom expenses decrease more than they would have if the generator was connected outside of the municipal network, which means that it's a net revenue gain. So it's positive for the municipality. They make an extra 200,000 Rand. And this is another example of where your use of system charges need to be designed in such a way that you don't over recover too much revenue from those customers, because they could potentially take you to court. So although we're using WEPS in this case, I'll show you what happens if we change it here to a use of system tariff. You'll be able to see if you are recovering the revenue after wheeling. And you can see in this case with the example use of system tariffs that you aren't. So that's in a nutshell how the Eskom bill, the customer bill, and the revenue impact sheets work. Over here on the invoice template, this is a customizable template where you can invoice your customer for the energy that they've purchased from the municipality, including the wheeled energy, and it's fully customizable. So you can add your municipality name and logo, add the address, all the billing information, the invoice number, account number, meter number. You can add more things if you want. And then over here, it follows more or less the same structure as the customer bill. It also pulls through all of these things automatically. It's like the use of system charge. You'll see here if I change this back to a WEPS credit and a Eskom connected generator, you'll see it says WEPS credit, and all of these cells will calculate, and then you have a bill. So you can pretty much copy and paste this and send it to the customer if you needed to. Then lastly, this green tab here is the revenue impact test tab. This is a separate tab which works the same way as the revenue impact tab that I showed you earlier, but you can play around a bit more freely. You can experiment with WEPS, with municipal connected generator, Eskom connected generator. You can test tariffs here. You can test your retail tariffs and you can test your use of system tariffs. And you can see in real time how this affects your Eskom bill and your municipal bill and your net revenue. So I would encourage you to play around here to become familiar with the concepts and make sure that you understand how wheeling affects your revenue and how you can make sure that you aren't losing out on revenue because of the way you've designed your tariffs. So I hope that's been helpful. There is also a guide, a small little guide on how to use this as well. So the best way to become comfortable with this is to look around and understand everything. I haven't hidden anything, so you're welcome to look at the calculations and see how everything works. The only advice I would give you is don't change anything that isn't in a yellow cell because you could break the formulas. And with that, I say thank you. Please reach out to us at Sustainable Energy Africa if you have any questions.